Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
Hello there, welcome back to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I have been trading for the past 8 years, and I'm a full-time options trader. In this video, we're talking about ETFs and stocks that can help protect your portfolio against any drop in the market. The market has been so hot, and at some point in time, we're going to go into a correction. And there are some ETFs and defensive stocks that you can buy to help hedge your portfolio against any drop. So if you are new here, please subscribe to the channel, like the video, share, and humbly help me grow the channel. If you are already a subscriber, thank you so much. I really appreciate you guys from tuning up and subscribing to this channel. First, let's look at the ETFs. We'll take a look at the ETFs first, and then we'll take a look at the defensive stocks. So the first ETF that we'll take a look at is SQQQ. This is just the inverse of the QQQ. The QQQ tracks the NASDAQ, and the SQQQ it goes in an inverse. It has an inverse relationship with the QQQ. So whenever the NASDAQ is going up, this will be going down. So if we are anticipating a drop in the market, you buy this. When the market drops, this goes up. The amount that this will go up is directly related to how much the market will drop, how much the NASDAQ will drop. If the QQQ drops by 1%, this will go up by 1%. So this is a complete hedge. If you have a lot of tech stocks in your portfolio, if you have a huge portfolio that you've been making a lot of gains and you want to protect it, this one alone can just hedge it for you, because it tracks the entire NASDAQ. And when the NASDAQ goes down, this goes up. The next one that we will take a look at is GLD. GLD, this is the gold ETF, and this one has been incredible. It's been incredible. I've made several videos about this, and it's kind of strange because this is supposed to be a hedge. But if you look at the daily chart, this thing has been going up since last year. If you look at how strong this market is and you want to participate, right? This is how I see it. People want to participate in the market, but at the same time, they want to hedge. So that's why you see a lot of these metals going up, especially gold, because people are hedging and they still want to be in the bull market. So GLD is one of the ETFs that can help you protect your portfolio against any drop in the market. The next one that we'll take a look at is another metal, silver. And SLV is not just a hedge. If you look at the conflict or this back and forth with China last week, it's because of the rare earth metals, your uraniums, all those rare earth metals. And a lot of analysts are forecasting that the demand for silver and copper is expected to double and triple by 2030. So this is not just a hedge. People are actually piling onto this. So that is the third one. Let's jump into the defense stock. The next one that we'll take a look at is Walmart, WMT. So Walmart is a defensive stock because no matter how bad the economy is, we also got to eat. We got to buy the things, the necessities that we need. So that's why when the economy is hard, you see stocks like Walmart, Costco, they'll still be doing well. So Walmart is something to look at if you are planning on hedging your portfolio, if you are planning on balancing out your portfolio with a little bit of defensive stock. You definitely want to look at Walmart. Okay. And the next one is PG. PG, that is Procter & Gamble. So this is also in the same lane as Walmart. I mean, Walmart sells all their product anyway. So this is the manufacturer. Walmart is the retailer. Every time the market goes down, you see this PG going up. Because again, you cannot not buy toothpaste. You are definitely going to buy all the necessities that you need, no matter how hard the economy is. You might cut on eating outside, you might cut on ordering food, but you are definitely going to go to Walmart and buy groceries. And you are definitely going to go to Walmart or your favorite grocery store and buy toothpaste and toothbrush. That's why these stocks, they always move, especially when the market is down. When the market is hot like this, nobody cares about P&G. As you can see here, it's been drifting down little by little because nobody cares when the market is this hot. Everybody wants to be in the NASDAQ and everybody wants to buy the growth stock because that's where the juice is. But when the market is about to correct, that's when you see people coming into stocks like this, because those are the stocks that goes up during a bear market, right? As Jim Cramer will tell you, that there is always a bull market somewhere. If you want to just simplify it, because most of us are in the NASDAQ, no matter how balanced your portfolio is, it tilts towards the NASDAQ, because that's where the growth stocks are. That's where all the big tech stocks are. So in order to simplify it, you can just buy the SQQQ, which will cover everything on the NASDAQ. And also, because even if you don't have a lot of tech stocks, I will still employ you to buy the SQQ, because the NASDAQ drops the most during the downturn on the market. So meaning that out of all the ETFs and the stocks that I covered, the SQQQ will appreciate the most when the market hits a correction. When there's a correction in the market, the SQQQ will appreciate the most, because the NASDAQ always drops the most. And this trades in an inverse relationship with the NASDAQ. So the SQQQ will appreciate the most. So to simplify it, you can just get the SQQQ and you'll be good. Hedge basically is meant to reduce your risk. You are always going to have a risk as long as you are in the stock market. As long as you are investing, you are always going to post the risk, because the higher the risk, the higher the rewards. That's why if you have a bad credit, they give you higher interest rate, because your risk is higher. So the lender has to get a higher reward. So the SQQ can just do it for you if you want to simplify it, because that's how I am doing it. Okay, so that's it for the video today. If you have any comment, leave in the comment section below. If you are new here, please, again, humbly subscribe to the channel, like the video, share, tell a friend to tell a friend. And until next time, let's keep making money.